Hey, welcome everybody. It's the Crypto Sniper. Yep, giving you an update. And it is Thursday, by the way. Thursday. What happens tomorrow? Friday. Yeah, great. Coming for the weekend. But more importantly, big data number. And what do we do on this big data number? We have a live trading day. We're going to be covering our last crypto video that we did for you on the Crypto Sniper. What we said we felt was coming, with a whole bunch of central banks due to speak for Bitcoin and Solana specifically. We also covered XRP in this video. We are going to review that quickly and tell you what's coming next. We have our live trading day tomorrow, and there will be an hour and a half of crypto specific content talking about the trades and the direction of the markets. Why should you care? Because it can help you position your entries to better maximize what is going on. What did we say last time? Are we worth listening to? Well, let's discuss. In this video that was posted, and how long ago was it? 3 days ago, 6,000 odd views, 455 likes. Thanks to the 455 for appreciating that we give updates on this. We said you're going to come on up to our capping descending grind line, that red line across the top of this megaphone structure. We said you're going to come across that top, and the key logical round number, that is 70,000, and you would be rejected to the downside. So our suggestion was that there would be a little bit more upside from 3 days to go, but then you would be rejected and sell off hard. That's what we said. How did it look? In other words, from here you would go up, meet the capping descending grind line, meet the 70k, and then potentially roll over for a spill to the downside. That means it's not a good time to enter, even though you'll get a little bit more upside, but that overall, we're expecting you're going to remain retained within the capping descending grind line and this larger broadening structure that we drew for you. This was covered in the video. We spoke about 2 points of resisting. You actually had one there, and then you needed to go a little bit higher there. You would have the 2 ears. We spoke about Fox's ears, Batman's ears there, a double top that we called, that was a resistance, and saw you sell off the last time. And we spoke about this entire impulse being 1, that being 2, and that you were up and over. You had a little bit more of the upside to go before you would roll over to the downside, remaining inside, curtailed within the megaphone structure that is sitting on a massive bull pole, but has actually seen Bitcoin fail to take out its high since March of this year, and actually been in quite a prolonged continuation structure. You even have the likes of Peter Brunn saying it's a bear market because you have lower highs and lower lows. That's not entirely correct. We'll give you our take on that, why this is a continuation pattern of some duration. But let's have a look at the chart. How did that call do? And we remove our lovely drawing lines, and there you go. The rising wedge into the just touch, look at that, kiss the 70k, why don't you, and rejected at our capping descending grind line, and down from there. And this has seen you spill rather hard, a splitter through the rising wedge, down, and quite big motion. It was not a good entry point, even though you would have gained a little on the upside before losing a lot for people that entered into crypto. That's one reason why you come and listen to us on technical analysis as to entries, because entries matter. The level you get long matter, and matter doubly when you're utilizing leverage, by the way. So that was point number 1. It was the 70k and the capping descending grind line that did for you there. We can have a look at deeper on in the video around the 28-minute mark, where we referred to this again. So we covered Bitcoin quite a lot. Why God market of crypto? It's obviously that important. What happened here? We were talking about the 3 clear impulses. Oh, and there was a rising wedge, illustrating how one of the ways you could break down would be you squeeze higher. I've done it in orange. I almost have to show you in a different color because I did it in orange at that point. Squeeze higher into a rising wedge before breaking down. on that 70K. I added the 70K line, the big key significant level that you could squeeze into a rising wedge at the 70K and be rejected at the combination of the capping descending grind line and the 70K level on a rising wedge. Again, that's the most common method. There's only certain ways, and as you can see, I can literally leave that drawing right on there because that's exactly what happened. Capping descending grind line, resistance, 70K resistance, just as they were very much a similar level, by the way. We can open this, flatten up a little bit because I'm nicking some candles there. We put it on the daily instead of the 12-hour. That's probably the similar draw. You can see this is really a very short wick when you do it like that, when you have it on the daily. It's a very short wick that just took you to the 70 and the capping descending grind line, and they occurred at the same point. And the level that broke, that line that broke over there, was in fact the rising wedge, the grind line beneath it. That sees you spill to the downside. 1 big rejection candle, 2, 3, 4 candles in a row on the daily, all bearish. You can see that entry over there. Bad place for entries, was it? One more time for the up and over overall for a move down to the downside. Interesting key level, by the way, that we're at here now at the 63K on the candle. So that was one part of what the video said. What we also said is that on the lower time frames, when you looked at it, and we handled that on the 33, it was clear to us that there was some building pressure coming, and that's on some of the basis that we give you the expectation of downside, that there was a broadening structure. In other words, you moved strongly up on a bull pole from the lows over here, but that you actually had an ascending broadening structure as well, which was highlighting potential weakness. We always put a split in there, and we expected you to revisit to the high side, and that's where you made that rising wedge, which looked like that, and then smashed down after a technical touch of the 70K. It was not long. I don't think very many Bitcoin traded at 70K. You might find one Satoshi managed to trade at the magic number of 70K. So that was also what we discussed in that video on the 33rd minute. We also took you into Solana, which was discussed, and that came a little bit later in the video, around the 45-minute mark. Let's take you into that. So Solana has been at that point until then illustrating relative strength compared to the remainder of the alts. So let's just show you that. And here you go. This was where we were discussing Solana, and you will have also noticed, if you hung about a little longer, let's just see if it comes up, that we warned you of a W bottom draw which gave a target. That target had not yet been met. HVF method says when targets are run, typically you get a sell-off. So you hadn't yet, you'd done a high of 185, the full target was still a bunch more. You needed a bit more out of Sol to get through that level, and then you could potentially have a pullback. You would have made the W bottom target with the neckline, and targets are there for a reason, because there's not much more goodness that comes after the target for a spell. That's what happens. You then go to the downside. So let's take a look how that turned out. We'll get our Solana USDT in here. And you can see that's pretty much exactly nailed the target quite perfectly. Had you jumped out at 189.05, there wouldn't have been much more you could have hoped to gain. And actually, this has been an accelerating spill, quite a stretchy candle. Of course, there was the Black Rock, the new controllers of risk on, risk off in crypto that appears to announce good things or bad things. Bad things invariably, ETF far off. Of course, Solana was told that it's not so close to it getting an ETF. So any of this run that was based on the upside on that basis, it's more likely to be further out. So they are the new Fed, the controllers of the asset classes, the BlackRock. That's right, your freedom land of crypto universe. is being controlled by BlackRock commentators that are essentially giving you the new equivalent of risk on, risk off for equity markets and everything else by just using the word ETF. ETF coming, good news. ETF far off, bad news. Delay, push out, bad news. Coming forward, should be ready soon, good news. And thereby manipulating and profiting, of course, from the market. And so you can see post the target run, technically from the W bottom that was called here, and we warned also in that video that when you get a W bottom once, you often get it a second time at a similar place. Nice little falling wedge there, and off you went to the upside on that one as well previously. But you made that target. You can see that actually the eventual high was very short, and I remember this little blow off run taking place before it was called time. High was 193.98, but the 189 was your target run. Again, it was not an entry point. It was not an entry point, and you can see we're throwing back down, and this is your neckline that is coming up super fast. That's a very ugly candle for Solana right now. So that extra bit of fundamental news has had a little bit of a flat wheel on Sol for now. But is it all over? No. What else did we say in the video? And this is your reason why, guys, you will be popping over and joining us for the live trading day tomorrow, because the reason is because you're going to get the best possible technical analysis on the main drivers in crypto, and also, by the way, the assessment in the traditional market side on the dollar and all the other aspects that are in fact drivers in the crypto market, such as gold as well, the anti-fiat. So Sol made its 2x bottom target. What happened next? Well, we also spoke to you about Sol versus BTC, and this was the relative strength assessment and how a return move back down to the funnel could be possible for Sol, and that might start to be one of the first shoes that could be considered on the shoe dropping basis. So that is Sol Bitcoin. And at that point, we highlighted that the first interim target level, you can barely see a line there, had been made, and that there were cause to believe that you could get a return move to our entry level funnel over there. How's that turned out? In fact, we just got a peep on Sol BTC. Let's go have a look. And this is what you will see. Sol BTC, yes please sir, Sol selling off rather briskly, in some ways even more so than Bitcoin, and we did just run an alert that was there for Bitcoin, and it is coming back down. And where was that structure that we drew that said it would be a return to the funnel? Let's draw it again and ensure it's on there, and you will see why we said this could indeed occur. A return move after the first interim, nice and light. We've got we can take off this fib because it's making it hard to see. Doesn't want to go. There we go, finally. So a return move for Sol BTC after making the first interim target. Again, a situation of squeezing higher on a small time frame, running into wick resistance, wick, not weak. And then the rejection candle coming in. That's your break on the rising wedge. Sell. And you've just triggered, literally you heard it peep while I was recording, an early warning that you are getting close to the return move, and you had this super squeezy Japanese ascending structure that was squeezing up, and a lot of these people buying up under Sol here would have been hoping for better news maybe, and some of them are crying off now. A return move to our just-in-time entry of 24,944, so sub 25, of course 2 zeros before that. Let's keep the numbers simple so we don't confuse people, and that's exactly what's happened. And this is one of the first of a potential new entry for Sol, one of the shoes I would wait for to drop. That has fallen now. So Sol's relative performance to Bitcoin has underperformed since here. 3 down candles. A re-entry point at sub 25 would be an amazing entry on Sol BTC. All you need to see is a sign of turning in Bitcoin against dollar, and therefore as a result a slow turning of Sol against dollar. One of the shoes have already dropped. For what we were showing you in that video 3 days before it happened, a return move back to funnel. But what do we say beyond that? Let's move a little bit forward and see if we still have the draw of the scenario. Further upside to follow after a return move from the first interim. Now it may not be as immediate and a straight line as that, but a dip back like this is actually an opportunity. The bad news on Sol. Wait, however, for the reversal to also show against the dollar for both Bitcoin and Sol. But we have reached the beginning of the relative strength benefit of Sol and Bitcoin, that it starts to become interesting. It can dip a touch lower on the Sol BTC. It could come into the funnel a little bit. If Sol USDT continues to go down and BTC USD continues to go down, I would expect Sol to go down a little quicker. You could start to see a basing that could run below the line. You're not going to call the bottom perfectly. That's why you also watch the Sol USDT to see when the selling part starts to throw up some small reversal patterns and is no longer as strong as it originally was. You've got a very stretchy candle there, as you can see. You've got a very stretchy candle. Take it into the 4 hourly and see what's happening. Still broadly down. There's not enough yet. Wait. You don't have to get in at the cheapest point. Big funnel here, by the way. Legacy setup. HVF method, the only method that has those levels in there. This is a seam of hard rock right here. You can expect it to be broken with momentum or to turn into support. If it is to be broken, it has to be broken with momentum. That's why you rested here, and that's why you're coming down hard. You will either have follow through momentum that will break it, and then you will rally back up into it. This is a seam of support as a result of the previous funnels and draws, which is why you formed this structure before you were able to get enough strength to break out above, and then came back and supported on before going up, and it served as support again there, and it even attempted support and gave you some support for a while there before the continued downside of the move. That's the value of HVF method. Real funnels. Hunt volatility funnel method, brought to you by Francis Hunt. And go and taste the experience of engaging with us on our live trading day on the link below. Click it. You can buy one event, that's attend tomorrow, plus have the recording for a full month to access in a beautifully hosted Kajabi environment, or alternatively buy 3 for the price of 2. And then you will have 3 months access to 3 successive live trading days where you'll get a feel for the kind of thing we do as an update. There doesn't need to be risk before booking to become one of our self-study members. Trading metamorphosis programs still in limited supply, I'm afraid, for now. Self-study only, but you can upgrade later when they become available again. Very limited supply in terms of TMPs. So that's it. Trading day coming tomorrow. What else do we want to tell you? Well, the scenario cast. We also spoke of Bitcoin dominance. We highlighted in the video that there would be one more move of potential Bitcoin dominance overall. We had it here. Let's go to the 113. We were looking at it in the upside down chart, as we like to do. You need to deal with biases. One more. So you see the inversions. This is Bitcoin dominance inverted. So bullish means bearish for Bitcoin dominance. That means it's going to be a smaller percentage of the overall crypto pie. And we said one more push to the downside to the lower end of this falling wedge, which means upside on the normal way around Bitcoin dominance. Let's have a look at Bitcoin dominance again and how that turned out, BTC dominance. So you can see when to enter and when not to enter. In fact, the main message of the previous video was saying it's not a good idea to enter to the long side on Sol or Bitcoin generally, that both will present better buying opportunities where you'll get more Sol for your investment and more relative Bitcoin for your investment, and even a potential better entry on Sol relative to Bitcoin on the Sol BTC chart. So here you can see BTC is gaining, and it does gain often in the down legs in dominance because it goes down in percentage terms less than the altcoin does. So it's gaining, and we still have a 58 point, where is our chart? Let's just see. We have a 58.33 overall. Well, almost 4. 58.4 dominance to be broken. There's of course the 58 round number. There's the 57.63. So one more surge potential for Bitcoin, which possibly suggests the downside could continue a little longer. Hence why you have the trigger on the Sol BTC once you run the green line. Not yet done, still got a bit lower to go, but you need to wait for the trigger of the bottoming on Bitcoin against dollar and Solana against dollar. And then you will get the outperformance on Solana on the reflation upside stage. This may not happen. And what else could happen as a wild card that could spoil this trade? How do you be wrong? Because just because you got some aspects correct for now doesn't mean everything's going to go the way you say it's going to be. How do we be wrong on this? Well, the way we would be wrong on this is if the current weakness in the global economy continued to escalate into a far more severe environment, and we went into a bit of a panic, say banks related, payments related, treasury bills debt related, or some other geopolitical event, which can be all forms of war, escalations, or hacking, or various other narratives, and many of them are exactly that, just narratives, that could see a major demand destroying event take place. That could actually be very beneficial for the Bitcoin dominance, but generally bad for crypto as a whole. It could be a bit of a fear moment. That is one wild card with a bit of a joker attached to it, which could pop out at any point and can't be underpriced. And that could see Sol fall further lower, and many others. And also the smaller the cap, the greater the degree of contraction. And that could bring, as I've already mentioned, the Bitcoin dominance home. So what else will you get on our live trading day with us in the link below? Click and book, have a taste of experiencing crypto with us. It's the second session. We will also be looking at the traditional markets, which include debt, dollar, yen, lots of interesting things, equities, all of those things, and then specifically an hour and a half on crypto, Bitcoin, where the floor will be, will there be a basement, plus at the same time see with us the non-farm payrolls data number and how the market will choose to react to that. Is it going to get more risk off and in fear, or could it get enthusiasm from the number and bring a bit of appetite for risk again? That will have a material effect that will roll into next week and have bearing on the next 2 weeks and trend. So data's come in trends typically. And the number coming out tomorrow will be very significant. We'll interpret that with you, along with setups, potentially with trades that we may take, both in the traditional market and the crypto market. You get to see how we analyze the charts, what aspects we are looking at, plus some of our better trades and how they look, the targets, the entries, the stops, the risk reward specifics. Is the juice worth the squeeze? How HVF method manages that? All that learning and potential trades that can be put on. Plus question time at the end of the sessions for you to ask to me directly live. I conduct this, nobody else. The buck stops with me. You will have me for 3 hours in 2 separate sessions giving you my best shot on everything in terms of how the market is set up and the effect of the newly released data that will come out in the morning. I look forward to it. You can too. It's very cheap to enjoy the experience. $195 isn't even a good meal out. Will you miss us nowadays with wine? If you're living in the US anyway, come and enjoy it with me and have a month's access to that material so that you can reflect on how it served you. Link below. Look forward to it. Give us a like if you value these updates, and we'll be coming back to you later on in the new week going forward as crypto sets out its stall. Bye from now.